Hello traders, Gary Wagner here, approximately 10:30 in Honolulu, 4:30 in New York, July the 2nd, 2015, and this is Trending Markets. We are currently looking at the euro dollar, which has come up off of its lows, currently trading up about 30 points, but below 111 at 110.82. Of course, we did initiate short positions in this market, roughly at 111.50, 111.60 in that area. We also sent out a trade alert yesterday to actually tighten those stops. Inasmuch as we have seen this market reacting throughout the morning to some jobs data that has come in, it came in under expectation, but I believe new jobs added were around 223,000. So a moderate report, not very, very bullish, not very, very bearish, and we had some mixed data in there. What we're seeing in the euro is really anticipation to Sunday's vote over in Greece, the referendum vote, to decide whether or not the Greek citizens believe that they should accept the current programs that are being offered to take some sort of a bailout package or go back to the table and renegotiate. As far as I'm concerned, either decision they make has got some dramatic repercussions, and overall, the way I view it is the most important thing is for the Greek economy really to get back on track. It has been contracting since 2008. Their GDP has contracted by as much as 25%. We've been talking about that all week. Unless that issue is solved, no amounts of haircuts, there's no amount of budget cuts that can make up for the fact that they do not have a robust economy. So where do we stand? My sense is right now that we could see the euro continue to fall. As I said, we are getting a little bit of supportive action in this. We are getting the dollar trading a little bit lower on the day. But one of the reasons for the dollar trading lower on the day, and let's go ahead and pull up our dollar charts, is that the anticipation of rate hikes, which was perceived to begin maybe in September, but definitely by September because of the most recent economic data and the jobs report, it could be kind of kicked down the road a little bit further. That, of course, is going to put some downside pressure on the U.S. dollar. And as you can see, it's currently trading off about 21 points at 96.09. So with the upcoming holiday weekend, meaning here in the United States, we will absolutely see fireworks here, the 4th of July, Independence Day. I also believe we could see some real fireworks in Europe as that referendum comes to a vote on Sunday. In either case, it will unfold by Monday morning here on the mainland. My suggestion in terms of our current position is to obviously maintain our long position in the U.S. dollar and to maintain our short position in the euro. Now, one of the other markets that we brought kind of into the fold yesterday, we've been looking at it throughout the development of trending markets, is crude oil. We saw oil dramatically decline. It declined from over $100 a barrel to an intraday low of just around $40 per barrel, then moved back up into the 60s area. We talked about the fact that when we looked at that market, what we genuinely saw more than anything else was this consolidation. Now, this is a weekly chart. So when you consider you've got 3, 4, 5, 6, you've got roughly 8 weeks or 2 months of activity, almost deadpan, almost directly sitting on this $60 mark. As I said yesterday, the move that we saw as it declined roughly $2.50 to me really signaled a break to the downside. With that in mind, my sense right now is that we could see this market head lower, although when we look at our current Elliott wave count, that is genuinely looking for this counter fourth wave here to really move up higher. My sense is if that's the case, we're looking at a count that will look something like this. Within the fourth wave, we've got our dramatic rise from $40 up to $60. We'll get some kind of a fall and then move up. In other words, it's going to be a count within our current major count, which is what we're looking at when we look at this major third. and major second wave here to the major third. So we'll have to see how that unfolds, but I do believe that we're probably going to see some weakness come into this market, and I think that the most prudent bet would be to initiate a short play. We'll talk about that next week. I don't think we're going to do anything with that this week, but it is something that's noteworthy and something we absolutely want to pay attention to. Can you say rocky road? And I am not referring to ice cream here, but rather what we have seen in the equities markets. First of all, the market in China has been under dramatic pressure. It's something we've talked about time and time again, and we certainly need to keep our eye on it. When we look at the Dow Jones Industrial Average, nominal move today when we consider that it closed off about 28 points, still very well below 18,000 at 17,730. But when we take a look at the most recent activity, what I think really stands out more than anything else is when there was the belief that we would have some real turmoil due to the Greek crisis in the European zone. We saw this dramatic decline. That happened this week, beginning of the week, and we saw the market roughly lose 350 points, which amounted to approximately 1.5 trillion in terms of the equity drawdown within the markets on that one given day. So a dramatic sell-off. However, since then, we have seen the market recoup and recoup with a vengeance. The following day after that decline, we did have a small green candle, although we didn't really see it move that far. Yesterday, we had the market move up another 138 points. So to give back roughly 30 points today is nominal as far as I'm concerned. What a lot of these markets are doing is, one, reacting to the information that came out on the jobs report, whether or not we're going to see a rate hike in September or December, whether or not that's going to get kicked down the road. That is one really dramatic factor. The other factor, of course, is the Eurozone. Now, I think in the big picture of it, the Eurozone and the Greek crisis, however that is resolved, really shouldn't have a dramatic impact on U.S. equities markets. Considering, and we've talked about this before, that Greek accounts for roughly 2% of the GDP, the actual monetary amount coming in to the Eurozone when you combine all the countries, it is a small amount. It really is something that is a landmark decision whether or not they continue to prop Greece up. And my sense is that Greece has got to really turn their economy around, because anything less than that, you are simply putting a finger in the dike, so to speak. You're not resolving the real issues at play. And obviously, the real question is, what are we going to see from this referendum on Sunday? The final chart that I really want to look at on today's trending markets is going to be this longer term study in the Eurodollar. A couple of things are absolutely noteworthy. One, we have certainly got our MACD to cross. You can also see momentum building to the downside here. You can see that by these lines moving down here. We also have on the MAC, the market really moving apart in terms of the two moving average lines first. Secondly, when we take a look at our longer term channel in the market, and once again, this is a daily chart, no doubt we hit the top of this channel and we have moved off of it. My sense is we'll move at least to midpoint on this channel line. That would take us to roughly 105. And as you know, my first target for this short position that we currently have in the euro is approximately 108. We'll have to see how that unfolds. As I said at the beginning of this report, I have no idea what's going to happen as that referendum comes to a vote, but I do believe that we'll see fireworks not only in the United States, but also in Europe, especially in Greece. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Remember, tomorrow we have shortened holiday hours, so it will be a quick wrap-up, to say the least. Bye-bye.